All right, welcome back to Stock Tricks with Nick for this week's breakout and breakdown watch list from April 25th to April 29th. Typically in this video, we cover 10 stocks with breakout potential, but with the market in a general downtrend, we've split it. 5 short setups and 5 long setups. This video is sponsored by MarketSmith, which is the trading research platform that we're going to be using to break down each of the stocks. If you guys enjoyed the video, please leave a like and subscribe to my channel. I make this breakout watch list every Sunday morning and then do other trading related videos. Here are the 5 potential long setups along with the 5 potential short setups. I'm not going to spend too much time here because we got a lot of charts to get through. First, we have AAL, American Airlines Group. That's in transportation airline, 85th strongest group out of 197. B minus group strength, A minus accumulation distribution, meaning the heavy volume days have come on up days versus down days. The stock is being accumulated, not distributed. It's got a 73 overall composite rating along with an 86 individual relative strength rating. Both of those numbers are a little bit low, but in this market, this is still one of the top setups that I could find. That's just the quality of the market that we're in right now. Within the group of 21 stocks, it's 4th strongest on relative strength, 6th strongest on accumulation distribution, and 9th out of 21 overall composite. Looking at the chart, this did have a really nice move from 1244 up to around 2140. It reported earnings on Thursday and it gapped up over 20, tried to push through here, but with the market pressure on Thursday along with Friday, it just could not continue rallying. But what I really like here is on Thursday we finished up still 3.8%. On Friday, really tough day in the market. This stock was only down 0.2 after attempting to rally and push higher, you can see here. And both days held this $20 area. So 2 scenarios for potential entry. If the market gaps down very poorly on Monday, and then we get an oversold bounce because the market's starting to get a little bit oversold in the short term. So we expect an oversold bounce, not a start of a new uptrend, but possibly a tradable bounce. So if we get that gap down on Monday and the stock gaps under 20, then potentially entering the trade with a break back over 20. Or if the market opens higher on Monday, then we could take the trade and manage our risk against 20 with a stop at 1975 or so. So that's AAL. Recently got through all the key moving averages. Earnings is behind us. Really good volume on some of these breakout days and showing relative strength the last 2 really tough market days. Next, we have CAR, Avis Budget. I did do a full video on this stock already. It was a past trade that I made last week. So if you want to check that video out, I'm going to link it up above right now. But after the past 2 days, you can see a really nice breakout here through 300. I entered at 170, sold in pieces throughout here, but I got out of the trade on Wednesday. On Thursday, we did push a little bit higher, but with market pressure, came back down, closed that day down 3.3%. I was really hoping that this stock would hold 300 on Friday. It didn't do that, but it did pull back 3.5% on much lighter volume than the breakout day. It does have earnings in 9 days, so for some of you, that's way too close to trade. Then just ignore this setup, skip to the next one using the comments. But what I would like to see here is volume dry up, allow that 8-day EMA to catch up, and then potentially taking this trade with a break over 300. Similar to AAL, we want to break through a whole number there. It's in Leisure Services Group, 42nd out of 197, so A minus group strength rating, 90 overall composite, 99 individual relative strength, very strong fundamentals, strongest stock in the group on relative strength, number 2 on overall composite basis. Fund ownership starting to flatten out here, but this stock has exhibited the ability to make these massive, very quick moves. So after a really nice 21% breakout, pulling back, ideally this held 300, but potentially taking this at 300 if the market conditions improve, that would be the entry point for CAR. Next, we have CTIC. That is a biotech stock, 92nd strongest group out of 197, B minus group strength rating. It's got a 61 composite, but a 99 individual relative strength rating. No fundamentals to talk about. Very much a technical trade here. It's number 1 in the group out of relative strength, 63rd on overall composite basis out of 794. Fund ownership has been steadily increasing since June of 2021. Bottomed there at 35, now at 43. But really what this chart is all about is exhibiting relative strength. As the market's been pulling in, it also had pulled in, but it never tested this rising 50-day moving average. And you can see this last week, we had a really strong move on the 19th. That was that was Tuesday. Really strong move on Tuesday. Wednesday continued higher highs, higher lows. Same with Thursday. So when the market was tough, this did close down just 1%, but tested $5, couldn't hold it with the market. Same thing on Friday, actually was up 3.5%, while the market was down 2.5%, 2.7%, whatever it was. And it did so on slightly more volume than the previous day. So with this, looking for a break over 5 as a potential entry point and a stop under Friday's low, 476. It's about a 5% stop. Again, or not again, didn't say this, but with biotechs, you want to take a smaller position size because there is that giant gap down risk. Ideally, you get into these biotech names as they're breaking out, you get a nice profit cushion, you take some of the trade off for profit, so then your overnight risk is not as much. So even if I'm going to take this trade with a break over 5, it's not going to be with a very large position size because, again, I am relatively fearful of those biotech gap downs. So that's CTIC. Next, we have SIMO. This is in computer data storage. Very weak group, 123rd out of 197. So that's a C group strength rating, but it does have an A- accumulation distribution, a 95 overall composite rating with an 83 individual relative strength rating. Within the group of 10 stocks, it's second on relative strength, number 1 on accumulation distribution, and number 2 overall composite. Taking a look at the fundamentals, very strong earnings per share growth. We have plus 39%, plus 85, plus 124, plus 121. That's year over year for the last 4 quarters. Sales were up 37, 62, 102, 84, and after-tax profit margin improving by about 20 to 25% each of those quarters. Again, year over year. This stock recently broke back over the 200-day moving average on April 12th here, and since then, we've pulled back and bounced at that area 2 days after we broke that moving average. And since then, showing great relative strength, not giving up much. Let's see, on actually both Thursday, plus 0.7%, Friday, plus 0.5%, were up days while the market was getting absolutely trashed, especially in tech names. So this is a tech name that's holding up very, very well. So if we get an oversold bounce in the market, but also in tech names, this is one that has been exhibiting that relative strength that would give us higher probability trade. So if we gap down on Monday and we could get an entry around this 200-day simple moving average, then you could keep a very, very tight stop just slightly below, maybe around the 21 EMA. Let's see what that would be. About 4.5% there. So that's SIMO. It is a tech name. So if we get an oversold bounce, maybe it gets some of the juice, but it's a tech name that's been showing great relative strength and has strong accumulation distribution, fundamentals, and taking a look at fund ownership, forgot to mention that, flattening her out around 225. And last stock I have on the long side is VTNR. This is an oil and gas stock, 19th strongest group out of 197. So it's an A group strength rating, B- accumulation distribution, 97 overall composite, along with an individual relative strength rating of 99. Fundamentals, very, very strong. Earnings per share up 200% year over year for the last 4 quarters, basically. Sales up 293, 78, and 87. And after-tax profit margins, 15, 15, 15, and 15. Within the group of 29 stocks, it's number 1 on relative strength, number 3 overall composite basis. Fund ownership has been rapidly increasing on this from 17 in March of 2021 to 62 this March. Looking at the chart, you can see this very nice big cup handle with a shakeout under $8 here. So we went from 11 to 764. That would definitely shake me out. I'm a weaker hand in the market, but shaking out the weaker hands here, then we consolidate, move up Tuesday and Wednesday, as some of the oil and gas names were. And then on Thursday, it tried to push higher, closed basically flat, and then on Friday we pulled in 3%, but the low of the day found support right at the 21-day EMA. So for this, ideally we get a couple more days tightening. So the daily bars tighten around that 8-day, that 21 EMA, so we can get a lower risk entry point. But just breaking into $9 would be an area that I'm looking at here, and then managing risk with the stop under Friday's low and the 21 EMA there. So that's VTNR, the last long that we'll talk about. So the first short opportunity we'll talk about is GDYN. This is in computer tech services, 129th strongest group out of 197. It's a C- group strength rating. Within the group of 53 stocks, it's 43rd on relative strength and 22nd middle of the pack on overall composite basis. It's It's got a relative strength rating of 16, composite rating of 68, does have an A- accumulation distribution, and does have relatively strong fundamentals, actually pretty strong fundamentals. So that is kind of taking a little bit of probability away from the trade. But what I like on the short side is this came back down from 40 all the way to $9. If you remember in December, I took this trade right at 40. It got out, I was feeling great, and then got stopped out as it came back under 40. And thankfully, I listened to my stop, because from 40 all the way down to 9, if I let my ego kind of control my trading and didn't manage my risk, this would have been a 75% loser right there. So now that it has consolidated, bounced up to that 50-day moving average, declining 50-day moving average, it has pulled back in, and it's been just chopping around $15 right now. And then with the most recent market action, previous 2 days have been down. And on Friday, we closed at the low of the day, down 4% and right below that 50-day moving average, or slightly, slightly above the 50-day moving average. So a couple different ways to trade this. If we get an oversold bounce in the market and this rallies back up to 15, potentially putting on a short position there, managing your risk against either a very, very tight stop at the high of the day on Friday, 1535. So that'd be about a 2% stop. Actually, that's probably where I would go with that stop. So keep the risk tight on a stop loss there. But if the market continues to fall apart, then a break under Friday's low is a potential short for GDYN. Next, we have GameStop. And I was actually looking at this for a potential long up until Friday's action. You know the story about GameStop, so not going to cover much of the previous chart, but we had a previous low here at 77.58. Then we rallied all the way up to just under $200. Over 100% rally, suckering back in that retail money until a nice round number, resistance, profit taking after this 100% move. You see a pullback to the 200-day, find a little resistance there or support there, flush back under the 21 or the 8-day EMA, now under the 21. And we're now approaching the 50-day moving average. But one thing that I wanted to point out here is this did have a high volume close here for the last, I think it was 4 months, 24.6 million shares traded on this day with a closing price of 141. So if I just draw a line at the close here, that was holding as support for closing prices throughout this pullback. Yeah, I know that's not drawn perfectly, but let me change to tracker pen. So you can see we closed at 141.46 on this day. So that 141 area, the high volume close, was supporting the stock on the pullback up until Friday's action where we broke and closed under 141. So a couple different ways to trade this. If we do get an oversold rally starting into Monday, rallying back into the 141 area is where I would want to start a short position and then manage my risk at that 8-day EMA and the previous day's high, which would be 146.30 there. So a little bit less than a 5% stop on that short position in GameStop. Next, we have NVDA. This is a semiconductor stock, 137th strongest group out of 197. It's a C- group strength rating, D+ accumulation distribution, 80 composite because it does have strong fundamentals, but the relative strength rating is 59. And this has really started to roll over. A couple weeks ago, semiconductors were the leading group in the market, but as leaders lead on the way up, they also lead on the way down as well. And semiconductors rolled well before the market really started to pick up steam on the way down. And you can see this broke under the 200-day, the 50-day. When was this? On April 7th. We consolidated a little bit because we did have, let me draw this. We did have this nice support around 208 area, 206. Doesn't have to be perfect, but you get what I'm talking about here. Couple times we've pulled back, found support, pulled back, found support, pulled back, found support, pulled back, built, and then eventually flushed on the weaker general market. So we did so on Thursday. On Friday, we broke under 200. Thursday, we bounced right at 200. The low of the day was 200. On Friday, we broke under $200, closed at the low of the day, down 3.3%. With this, we are extended from the 8-day EMA, so if we get an oversold bounce, I kind of do expect it to be back over $200, but if we can rally up to this 205 area, 206, where the previous low was at, that's where I would want to initiate a short position and then keep my risk within 3 to 5% on NVDA. Next, we have Palantir, PLTR, another 2020-2021 very popular stock that has been in a stage 4 downtrend and should be avoided on the long side. This is in computer software enterprises, 196 out of 197, basically the worst group. Group's rating E, accumulation distribution C-, composite rating 28, relative strength rating 16. Had negative earnings in the most recent quarter. Does report in 16 days, but sales were improving, but at a decelerating rate. After-tax profit margin, same thing, and now we did see negative earnings growth in the most recent quarter. Within that very, very weak group, it's 67th out of 126 on relative strength and 57th out of 126 overall composite basis. Fund ownership has also started to decline from 787 to 750. Remember, price peaks well before the number of funds actually peak. But if you could start to see the decelerating rate of fund ownership, that is a warning sign that the stock might be potentially peaking there. So we had a rally from 974, kind of failed, but found support at 1027, rallied up to $15, failed there, and now we have all the key moving averages right around the same price. We broke and closed at the low of the day, down 3%, below all those key moving averages and below $12. This is one where if we do get an oversold bounce, I probably would just avoid shorting this one because if we do bounce, we're going to get back over the 8, the 21, and the 50-day. But if the market continues to push lower, then just breaking under the low of the day today, or the low of the day on Friday, which was 1186 is your potential entry point for Palantir. And last stock that we'll cover on the short end is PATH. This is in computer software enterprises, 196 out of 197. We covered that. D plus accumulation distribution, 16 overall composite, 3 relative strength. Remember, on the long side, we're looking for 90s and above. So for shorting, anything below 10 is a really nice position to be in here. It did have strong fundamentals, but similar to Palantir, had negative earnings per share growth year over year in the most recent quarter. Sales are improving but decelerating. And after-tax profit margin was actually improving by 10% there. It's very weak within the group. It's 117 out of 126 on relative strength, 77 out of 126 on composite basis. You do see the fund ownership declining from 401 to 394 now. With this, if we rally up on Monday, we want to use $20 as a potential entry point and manage our risk at 2014, 2015. Very, very tight action there. Or if we just fall apart on Monday, breaking under the low from Friday, 1766 is your potential entry point for PATH on the short end. All right, that's gonna be the breakout and breakdown watch list of the week. If you guys enjoyed the video, please leave a like and subscribe to my channel. I make this breakout watch list video every Sunday along with other trading content. Big thanks to MarketSmith for sponsoring this video. If you guys enjoyed the platform, there's a link in the description below that you guys could try it out yourselves. And finally, if you want to keep up with the stocks that I'm watching throughout the week, give me a follow on Twitter and StockTwits. Those are the 2 areas that I post the most. Have a great week, and I'll see you guys in the next video.